Welcome to TradeTheNBI.com. This is John. This report is for the 5th of July, and, well, holiday session for Monday because of 4th of July on a Sunday. Friday left us with a positive extreme on the daily, which means we're just going to fill back in that space. And it's not surprising given how extreme we're seeing here from these readings. Of course, it can stay like that for a while, as we saw back here in April. And with that deep dip of the white NBI, still looking very positive. Of course, you even have green over DOC, red, and red rising along cyan underneath red as well. So just a continuation. In fact, I was pointing out from a 50K standpoint, you have to go all the way back to the beginning of the rise back in June 20th here, where we started to pop up and got above the 76% Fibonacci line. And we've not closed below it. Had a couple little just tiny dips intra bar move below, but it stayed pretty much above that. Of course, we've got a series of positive extremes going all the way back down to that 4,300 even. And what you're really seeing from the market here is an expectation of increased value from, inflation. It's projecting a significant amount, plus the expectation that pandemic relief is going to start to see some significant improvement. Of course, that's going to change when many of the different states now are starting to change some of their unemployment offerings, and that's going to have a disruptive effect as far as purchasing power and labor participation. So what you're starting to see is this rotation into various different categories, which I think is resulting in some rebalancing, and that just puts things in a little more precarious state because some people are not necessarily convinced, and I think that's going to start creating some of the volatility that we're looking for. This should start to build as we go forward here, because before you just had universal acceptance that everything was fantastic and moving in the right direction. And as people start to change that viewpoint, and I think the Fed may actually tighten a little bit here and there, you're going to have some disagreement, and in that you're going to see the volatility because there's going to be a rotation back and forth. But the NQ clearly has been way outperforming all other aspects. From a gold standpoint, you're seeing a slight increase beginning there. And from a euro standpoint, also potential for a build back up, but still historically way above where its range has been. So it's in a strong state. Always fun to look at the Bitcoin. Of course, we had that rate spike after we had reached the lows, and it was interesting because we gapped up significantly for the holiday session. Of course, it sold off precipitously, or right back to the exact same spot, 34K. It's sort of been this hold spot, and I think as soon as people saw that bounce back up, they jumped on it. But making slightly lower highs, always worth taking a look at those setups here. From a 5K standpoint, boring day, pretty much just straight through the roof, and then as the end of the day came, we finally got some buildup of the weight and some pressure, and that led to the dip down to the 50% mark, and it'll turn around right here, popping back up. The question will be if that doesn't get back up to the 100%. Of course, with this limited time frame, we're not going to know much more until late evening and the beginning for the new week, which will be Tuesday's action. So that'll be the predominant force at that particular point when real volume gets in there. So enjoy the holiday. I hope everyone had a great time, and get back at it here in a serious way. As always, though, trade well. We'll talk to you later.